Peter, thank you so much for your time. Would you say that this was a referendum on what to expect from corporate Nigeria in this earnings season? The market has been down pretty much all week. Do you think that we're going to see more of the same moving forward?
Yes, we're going to see more of the same moving forward in the next couple of weeks. What has happened basically is a market correction driven by technical and fundamental factors. The market has been in the overbought territory for a couple of weeks using the RSI indicator. Most stocks were trading at their 52-day high. So basically people are trying to bank in profits, taking profits, and take advantage of earnings this season.
All right. But what has been your assessment of the results we've seen so far, from maybe starting with the banks and then maybe non-financial companies too?
Yes, so for instance, the AXA Mansard result that was released on Monday was relatively good, given the fact that claims were high last year as a result of the unrest during the year. Gross premium rose by 9%, and PAT rose by 47%, which is actually good earnings for AXA Mansard. Total also released their result during the year. Gross earnings declined by about 30% as a result of the negative working environment that was experienced last year, high cost of production, and basically the lockdown that was experienced last year. But they were able to manage their cost, increase operational efficiencies, and basically their PAT, declined marginally by 149 basis points.
All right. And earlier I was just assessing the central bank's decision to increase the OMO rate, or the rate or the yield
Yes.
on OMO treasury bills. And many are pointing to that as a
Yes.
move to lure foreign investors back in. We've seen that foreign investors have also stayed away from the equities
Yes.
market. Do you get the sense that the central bank may be able to pull something off that will attract them to that market as well? Because while we know that a lot of foreign portfolio flows move into the fixed income markets, historically as well, we have seen quite a bit move to the equities market, which would certainly help given the scarcity of Forex that we've seen recently.
Yeah, so what we're seeing now is basically normalization of monetary policy from the central bank. As crude oil prices are increasing and optimism on output recovery, and expected, of course, improvements in domestic economy, we are seeing the reversal of the dovish monetary policy stance of the CBN, basically to tackle inflation, to tackle exchange rate pressures, and to attract foreign capital inflows. We're already seeing yields, increase in the fixed income space. From the last bond auction, you can see that yields has actually significantly started to increase. The 15 and the 25-year bond increased by 155 basis points and 195 basis points respectively. This is what the CBN is trying to do to basically, curb inflation and, of course, attract the necessary capital inflows to be able to manage the external reserves and exchange rate pressures.